Hello and a warm welcome to my YouTube channel where I cover stocks and derivative data almost on a daily basis. Now, in this video, I've got for you PVR INOX, the multiplex giants of India. Earlier, PVR was separate, INOX was separate, but then they had the merger in 2021. Now, before we go into the what is the immediate, let's have to try to understand how PVR has evolved from 2009 when but before that there was INOX which was the player, and before they were listed, uh, the evolution of multiplexes started. And from 2016 17 when slowly OTT started with Netflix, and then during the COVID lockdown we saw the stock do quite a severe correction as more and more people started getting used to the idea of watching on OTT. Many people who are not too much into the television, or rather what we call the idiot box, started watching because there was nothing to do in the lockdown at home. And soon that habit started. And of course, OTT has now given rise to so many new characters, so many new artists have performed, so many kinds of genre movies come up, and everyone has his own choice. And best part is the artificial intelligence of the OTT platform. After you watch one particular TV series or another movie or something, knows your choice and keeps trying to tell you, show you different kinds. And then of course the impact of regional uh, uh, entertainment which came in. So prior to the OTT, we could you would rarely watch something which was in another language. Forget international, even our national languages, from here to there, people would rarely watch. But now we can already see the emergence of movies from south of India, especially from the Tollywood, or we call the Telugu film industry, and even from Kerala, the movies which have come out like Drishyam and so on, and now of course RRR. So the impact these movies have had on the OTT platform has impacted, which is typical Bollywood, the Hindi cinema industry, and also its indirect impact initially after the COVID lockdown. Before in fact, the lockdown got over and easing, movie halls started, INOX and PVR started rallying. But then people slowly started realizing the impact it has, and of course the cost of watching a movie and the add-ons of a movie, the food and beverages are also pretty steep in a movie hall if you go in a family like that. But nevertheless, now let's come back to the charts of it and discuss. So from 2009, the first leg of the rally started from here, and this moved up, pushed down, and then a big rally. And from that rally, we have had one leg down. Now it could be quite tempting to say that this leg is also a part of a correction. So what we could say is that something like this, that in Ichimoku terms, that this is the first I wave, and what is happening now is the corrective V wave in it. A corrective V wave formation. It could be a corrective V wave. If the corrective V wave is over, now in Ichimoku, we do not have any particular mandatory reason of a wave to end below the first pivot or not. A wave can end way before the uh, stock has hit the low. A higher low formation also can end a corrective out here. It is also possible like that in Ichimoku. So in the monthly time frame, we can see the stock has come down and taken rest at the Kumo support, a flat long Kumo line support out here. The future Kumo remains bullish in the monthly right now, which is one of the reasons why the stock did not further fall down. It tried to hold on to its what do you call it? It was declining even in April when the markets had bottomed out. So here we had a smallish bounce back. The lagging line also got protected on the way down. So we stopped out here. So even if it is if you look at it from a bearish angle, it will take a little bit of time for this to turn bearish. So could have consolidation. That's the bearish scenario, but it's not necessarily become bearish like that itself and fall, because If it does decline, it has got first a major support at 1340 odd, and then a very big one near 1200. But that would be a continuous decline happening 1200 like that. Let's have a look at the weekly support. Now we know the monthly, how the monthly scenario looks like. In the weekly, it's still quite in a bearish zone. Not too much of recovery seen at all right now. Future Kumo quite bearish. Lagging line also quite similarly staggered. In fact, out here, we've seen a head and shoulder breakdown take place out here. This was the shoulder formation out here. This is the head. And that has completed its minimum target out here. So one of the reasons that the head and shoulder Fibonacci extension has completed its minimum target. Of course, it can fall more, but normally when a minimum target is achieved, a stock tends to bounce back or consolidate after that, because it's also quite heavily oversold, as we can see out here. The baseline is as good as flat, and it could remain flat for a couple of more weeks, which would suggest that yes, the trend might not fall, or it could go sideways for some more time out here. Also, you can see out here that in the weekly time frame, we have a bullish harmonic ABCD also formation with it. So Ichimoku monthly support, a head and shoulder minimum target done with a bullish harmonic ABCD confirmation, which has shown us a reversal from here. Now, before I go into the daily time frame of PVR, just a reminder for those who want to learn harmonic trading patterns, Ichimoku multi-time frame systems, and trading psychology risk management. My courses, videos, and PDF are available. They are from basic to intermediate to advanced, with lots of examples and clarity on each trend, that is on an uptrend, downtrend, sideways, how to identify, how to initiate a trade, and how to trail it. All aspects of it are covered. They are extremely detailed. Each course runs into long, lengthy duration with minute to minute angles covered, no shortcuts at all. Everything is in detail. Plus, those who subscribe to the courses get a one-on-one interaction with me for clarification of their doubts or verification of their understanding of the topic. Those who go for the trading psychology risk management course get 10 sessions of live trading with me, one-on-one exclusive, where I teach them how to reduce risks further in your trades, how to combine two studies or more, and how to use which one will work for you, how to identify your strengths and your trading mindset, discipline, and of course, various ways to manage risk and understanding of what is trading discipline in that course. So those interested, check out the link in the description box. Now let's go back to the charts of PVR. Yeah. So in the daily time frame, we can see that the baseline has now been cut. So a lot of traders, positional traders who are shorting PVR or buying puts of PVR, settlement after settlement on the way down, once that head and shoulder got activated, are now as good as out of the short trade, or have heavily hedged their position. In fact, some may have been started looking to buy it here from a short-term perspective, as we have two things taking place out here. One, the stock has cut and sustained above the baseline of Ichimoku, which is like a dynamic trailing stop loss line. And also we have a bullish TK crossover, even though the crossover is happening below the cloud, but it is a early signal where we could be looking for upside now from here onwards, at least in the short term. Now let's have a look at what the hourly time frame is suggesting out here. So in the hourly time frame, we had a try to push it above the cloud, moving up, and the last 2 days has seen some profit booking, very good cloud support coming in at 1420 or 1400, but a major support sits at 1400 to 1380. This is a very crucial one, which we also saw in the monthly chart. So a monthly support as well as a weekly support has been set up out here. And also we can see that the bullish harmonic reversal which has taken place in the stock is respecting currently this particular trend line. We're seeing higher low formations in the lower time frame right now. We've had this out here, and now we've had this. If this holds, this would be another higher low. We've seen highs, higher highs out here and higher highs out here. So interestingly, well poised stock. If this particular zone of 1400 to I would say 1380 is protected, then a good chance, that the stock, even, it could set up a bear trap in a dip like this, and then try to push it way up from here. That's an interesting angle. So one should be able to manage their risk accordingly. Now, upside resistance for the stock, where do I see that in the short term? Right now, in line with we'll try to do a multi-time frame way to do it with the weekly and monthly also to see. So the first one is coming up at 1475 odd. This is a big cloud resistance. In case it holds on to this level now and tries to push its way up, it could see some blockage out here, right here, or see some, consolidation in that zone, which could see some sideways movement before it penetrates like this, something, and then penetrate. In case it does penetrate above it, with or without a consolidation, the next major blockage for the stock then comes at 1580 to 1600 bucks. That's the area where some further toughness will come. So please remember the levels which I'm suggesting out here: 1475, 1580 to 1600. This is the level we need to watch out for. At those levels out here, we could see again another round of consolidation in the stock, which could further keep the stock busy. In case there is no consolidation here and it pushes its way up here, we could see some consolidation taking place like this before it again tries to do an attempt. This time, after this level out here, we can see a lot of time took place. This is the neckline of the head and shoulder which broke down out here at 1650. So in case it breaks above that, its next move will be towards 1900, which is again a huge resistance in it, 1900 out here. So keep those levels in mind for the upside, and for the downside, like I said, that anything below 1400 to 1380 might resume its downward move towards 1300, 1200, and so on like that in that case. Now, let's try to look at it again from the levels which I mentioned on the upside, on how it matches up with the higher time frame. And you can see out here, yes, this was the neckline breakdown. It is also a block for the lagging line, and the baseline is also nearby there, 1600. So two time frames giving us almost the same kind of a resistance. And then the next one is again at the cloud block out here near 1850 to 1900. So different time frames giving us the same kind of level of resistance for the stock out there. Even in the monthly, we can see the baseline is at 1650, 1600 odd. Like I said, those are the levels we need to be careful at those levels and look at how the stock reacts out there before further going. So in case it breaks down, we must also keep an eye on the risk. Like I said, 1380 below that, 1325, then 1200, anything below that, 970, and further pushes its way down then. So that would be the bleak sign. From a risk reward point of view, looks quite interesting. One must manage their risk accordingly in the trade. This is the disclaimer. This is not a trading or investing advice to any of you. Please do your research thoroughly. This is an educational video using Ichimoku and Harmonics, which I teach, which I practice, and which I am showing out here. So please do your research thoroughly before considering a trade or an investment in it. I hope this video is of help to you, and please don't forget to like it, share the video, and also subscribe to the channel. Until then, happy investing, everyone. Bye bye.